You're welcome to the Forex Trading and Lifestyle Entrepreneurship channel. Do take a minute to pause this video and read this disclaimer. Hi there, it's Victor here from ForeShoreMarkets.com. So in today's video, I will be showing you the moving average trend indicator, how it works and how you can use it to analyze your trend. All right. So like I established in the previous video, we said the moving average is a trend indicator. Personally, the moving average is my most preferred trend indicator for analysis. So what does the moving do? How does it get its data? Okay, the moving average basically it measures the average price value for specific periods of time, and analysts use it to predict the direction of price movement. Okay, let me go to a real chart and see how I can show you that. So let me take that again. The moving average measures the average price value for a specific period of time, and analysts use it to predict direction of the price movement. Okay, so I don't want to go into the calculation of how the computer derives the moving average, because honestly this is not a theoretical class. The key thing is, how do you use the moving averages to make money? Okay, it's as simple as that. Okay, so I'm going to go and put in a sample moving average. So you want to put in a moving average, you come on your MetaTrader 4. You can do this on your phone or on your laptop. Okay, I can link the videos for how to do this on your phone in the description section. So you come to this cursor here, click it. No, not this. Where's the other one? Moving average indicators. I think should be this indicators list. You can see it there. You click on that, and then you can see here that your indicators are already classified. So all trend indicators can be found under this button here. All oscillators can be found under this button here. And as you can see, you have volumes, which is another category of indicators I mentioned in passing. You have Bill Williams, and you have custom indicators, which is custom indicators are indicators that are developed by individuals like you and I. So we go on that trend, and then you pick moving average. Okay, so I'm going to pick example moving average. I'm going to pick, let's say, 20. Okay, I'd like to show you that you have different types of moving average. You have simple moving average, exponential moving average, you have smoothed moving average, you have linear weighted moving average. Okay, these are not complex concepts, they are just different methods of calculating averages. Okay, if you did your basic mathematics, you understand what this is all about. And if you want to go further into calculations, you can just do a Google search. What is simple moving average? What is exponential moving average? What is smoothed moving average? What is linear weighted moving average? And apply that to your data. And what data are you applying that to? The data of your candlesticks. Let me make this bigger. So you can apply that to apply it to your candlesticks. The data you need is by using let me see, where's the trend moving average. So you can see here, this is where you check the different types of moving average. You have simple, exponential, smoothed, and linear weighted. Okay, here you have the period. The period simply means how many candles. So if you're using a 4-hour chart, like I'm on 4 hours now, you're using a period 20. It means you're calculating the average price of the last 20 candles. Okay, looking back. So 20, start counting from here. The previous one, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So if I put in, let me mark that line somewhere around, let's mark that line. That's somewhere around here, not precisely, but that's an idea. Okay, so I put in this box, I'm simply telling the computer, the mathematical program, to calculate the average of the last 20 candles. Your data for calculation, you can use, of course, you can use different types of calculation: simple calculation, exponential calculation, smoothed calculation, or linear weighted calculation. And then the data for your calculation, you can use the closing price of the last 20 candles. You can use the open price of the last 20 candles. You can use the high price of the last 20 candles, or you can use the low price of the last 20 candles. For this example, I will use the closing price of the last 20 candles, and it simply means that, okay, let me just put it. Then you choose your color here, choose your thickness, and then you click OK. And the system, this is just a mathematical program that has been programmed. You put in the data and it calculates for you. Okay, so this line is simply showing you, if I put your cursor here, you can see that the price there on the small box there is 113.73. So 113.73 is simply the average closings of the last 20 candles. Okay, meaning you add all the closing prices, 20 of them, and then divided by 20, it will give you this number here, which is 113.73. Okay, so the average prices basically gives you an idea of what to expect in the future. All right, so let's look at this. Basically what your moving average is. Okay, so how do you use your moving average? We go to the next slide. Okay, it is very simple. Interpretation is very simple. It will simply say that when price moves below the moving average, it is the downtrend is starting, or it is a sell signal. Okay, now you can see here price was initially above the moving average, indicating an uptrend, and then it crossed below the moving average, indicating that a downtrend may be about to start. And of course, once the price closes below there, you can, for moving average analysis alone, it is a sell signal. Okay, and then for the buy, when the price is coming down, okay, and it crosses back above the moving average to the upside, it's an indication that an uptrend is about starting, and we consider it a buy signal. Okay, of course, remember that this is not 100%. This is a lagging indicator. It only crosses after the price has moved. Okay, you need to be aware of that. So how do we use this? Let's go to a real chart. Okay, so why is this concept important? If you've ever done any form of trading in the past or investing, you understand that. Let's look at from here. Okay, as long as the closing price or the open price of your candles are increasing, it means, like here is going up, the closing price will be increasing. By the time you add the average, or add the closing price of the last 20 candles in an uptrend, you will see that this moving average, your calculation, will be increasing. Okay, and that increase in the average is simply telling you that we can continue expecting that the closing price of the future candle is going to be higher. Okay, so let's look at this. For example, the average of the last 20 candles shows below 113.73, and which shows that the moment price crossed below here, or below here, we can expect that the future candles 1, 2, 3, 4, any of them, is going to, the average is going to remain below 113.73, and we can confidently say we are going to remain bearish, or we're going to remain selling until the candlesticks comes back and crosses above this moving average. Okay, so that's a simple explanation. In simple terms, when the price crosses up above the moving average, we should be thinking about an uptrend, and a buy, it is a buy signal. And then, for example, here, when the price closes, the candle has to close closes below the moving average, we consider it that a downtrend is starting. Okay, and let's say a downtrend is starting, we consider it as a sell signal, just using moving averages alone. But ideally, you're going to combine the moving average, then combine it with maybe a MACD, and combine it with some chart patterns and price action to make it more efficient. Using just moving average alone is not going to give you good results. So we need multiple confirmations using different concepts to get the best results. Okay, so this is number one way of how you use your moving average, and it's pretty accurate. All you need to do is try to eliminate the sideways market, because in a sideways market, let me look for a sideways market for you. In a sideways market, example like this, let's use this example. In a sideways market, you tend to see the moving average crossing up and down many times. Okay, so you need to find a way to eliminate this sideways market and only use this indicator when there's an uptrend or a downtrend. In a sideways market, it's going to give you a lot of wrong. Okay, this is an excellent one. Sideways market is going to give you a lot of wrong signals. So up, you may buy; down, you sell; up, buy; down, you sell; up, buy. So you want to try and avoid this periods where the market is sideways, because your trend indicator is going to fail. All right. So that's basically how you use the moving average indicator for your trading. Okay, in the next video, I'm going to show you how you can use two moving averages to do your analysis and place profitable trades. Okay, so I hope you learned something new in the video. If you've learned something new in the video, give us a thumbs up. I'm always asking for thumbs up. I'm always begging for thumbs up. You know, it's fun, but we just needed to keep our YouTube channel alive. Okay, to encourage us as well. If this is your first time watching any of my videos, make sure you click the subscribe button, click the bell to the right of the subscribe button, and click all notifications so you can get notified whenever we upload a new video. I'm really enjoying this journey. I'm enjoying teaching you. As we teach, we learn more, you know, and I believe I achieve fulfillment from being able to help you start your journey and achieve your goals. All right, so I'll see you in the next video. Have a wonderful and a profitable trading day. Cheers.